Margaret is a 69-year-old retired nurse from Memphis. She had been on Medicare for 4 years and collecting Social Security for three. She paid her $200 and 2.90 Part B premium every month without question. She paid her annual deductible. She paid her co-pays every time she went to the doctor, which at 69 with a replaced knee and a thyroid condition she was managing was often. She built her retirement budget around those numbers the same way she built her working life around her income, carefully, without complaint. Last fall, she was sitting in her doctor's waiting room when the woman next to her mentioned she had not paid a Medicare premium in 2 years. Margaret assumed the woman had different coverage. She asked. The woman told her about something called the Medicare Savings Program and gave her a phone number. Margaret sat in the parking lot and did the math on her phone. $202.90 a month for 48 months. She had paid $9,739 in premiums on a program that was supposed to cover all of it if her income fell within a certain range. Her income fell within the range. It had fallen within the range since the day she enrolled. She made 3 phone calls that week. By the time her next Social Security statement arrived, her monthly income was $570 higher permanently. For the rest of her retirement, not from a lawsuit, not from a new government program, from 3 calls that took less than 2 hours combined, calls she could have made the day she turned 65, calls nobody told her to make. My name is Mason Parker. For over a decade, I have studied retirement benefits, senior tax programs, and the financial rules that affect seniors every single year. What Margaret's situation shows is not a rare exception. It is a pattern that is repeating right now across millions of households. If you are serious about your retirement income and you want to know what the system is not telling you, this channel was built for you. Subscribe right now and turn on the bell. The people who are subscribed here find out about rules like these before they cost them years of income. The ones who are not tend to find out after. Hit subscribe and let us get into all 3 calls. Here is what I want you to hold on to through this entire video. 2 things are coming in addition to the 3 calls. First, I'm going to walk you through a billing protection that comes with one of these calls that federal law entitles you to and that most seniors who qualify have never once used. Providers who ignore it can face federal penalties. Second, I am going to show you exactly how a scam targeting. Call 1 specifically is running in 2026 and the one sentence that stops it completely. Both are coming. Stay through all 3 calls because call 3 is the one the SSA has the least financial reason in the world to ever bring up first. The earnings record verification call. The first call is to Social Security and it involves a record that is sitting online right now with your name on it that most seniors have never once looked at. Here is why it matters. Social Security calculates your benefit from your 35 highest earning years. Every year of earnings on your record came from a payroll report submitted by your employer. Before the year 2000, the majority of that processing was done manually. Employers submitted paper forms. SSA clerks entered the data. Numbers got transposed. Entire years got skipped. Part-year employment at companies that closed before filing their final reports never made it into the system. An IRS and SSA joint review found that approximately 3.3% of all Social Security wage entries contain errors, applied to 70 million active beneficiaries. That is over 2 million people collecting less per month than they actually earned, not because they did anything wrong, because a payroll clerk entered the wrong number decades ago and nobody ever checked. What one missing year actually costs you. Each incorrect year on your earnings record reduces your monthly benefit by approximately $100 permanently. That is not a rounding error. That is $1,200 per year. On a 2-0-year retirement, one missing year cost you $24,000. 2 missing years cost $48,000. 3 costs $72,000. And the record has been sitting there the entire time. Available for anyone to check, waiting for you to look at it. The correction is free. The documentation required is a W-2, an old tax return, or a pay stub from the year in question. Documents that are easier to locate right now than they will be 5 years from now when employers have closed, records have been archived, and paper trails have disappeared. How to find the error before you call. Before you call, spend 10 minutes doing this. Log into your My Social Security account at ssa.gov. If you do not have one, create it. It takes about 10 minutes and is the most useful account you will ever set up for your retirement. Once you are logged in, open your earning statement. You will see a list of every year of your working life with a dollar figure beside each one. Compare those figures against whatever records you have: old tax returns, W-2 forms, pay stubs, even a reliable memory of what you earned and where. You are looking for three things: any year that shows zero when you know you are working, any year where the figure is significantly lower than what you actually earned, and any year that is simply missing from the list entirely. Pay closest attention to your highest earning years. An error in a year where you earned $60,000 damages your calculation far more than an error in a year where you earned $18,000. Also, pay close attention to years when you changed employers, because each employer transition was another opportunity for someone in a payroll department to attach your wages to the wrong record. If you are a woman who changed your name after marriage or divorce at any point during your career, look specifically at the years surrounding that name change. A mismatch between the name your employer submitted and the name on your Social Security record can prevent those earnings from attaching to your file at all. Decades of work sitting in the SSA system credited to nobody. Once you have identified any years that look wrong, make the call. The number is 1-800-77-21213. When an agent answers, say exactly this: I want to request my complete earnings history and verify my record for any discrepancies year by year. That language opens the correct process. The correction form is SSA 7008, available free at ssa.gov. It must be mailed or hand-delivered to your local SSA office. It cannot be filed online. Sign it in ink before mailing. An unsigned form is treated as if it was never filed, and the correction window keeps running. Margaret's result from this call: 1 year missing entirely, 1994. 8 months at a printing company that closed the following year. The company's final payroll submission was never processed. One correction: added $87 to her monthly benefit permanently. She will collect that extra $87 every single month for the rest of her life. The earnings correction scam: how it works in 2026. Before we move to call 2, I need to tell you about something running specifically around earnings record corrections right now, because it is targeting seniors who have watched videos exactly like this one. After a senior learns that their earnings record might contain an error and that correcting it could increase their monthly benefit, they sometimes receive a call or see an advertisement from a company identifying itself as a Social Security benefit recovery specialist or a federal earnings audit service. The pitch is straightforward. They offer to handle the entire correction process: the SSA 7008 filing, the documentation retrieval, the follow-up, in exchange for either a flat fee of several $100s or a percentage of any monthly increase going forward, sometimes 20% or more of every larger check for years. Here is the sentence that exposes this every single time: everything they are offering to do is completely free, and you can do it yourself directly with the SSA. Downloading form SSA 7008 is free. Retrieving your W-2 records through the SSA itself going back to 1978 is free. Retrieving income transcripts through IRS Form 4 506-T is free. Filing the correction is free. The entire process from identifying the error to receiving the corrected benefit costs you nothing beyond the time it takes to make the call and mail the form. Anyone offering to handle this for a fee is following the exact free steps I just described and charging you for the privilege of watching them do it. End that call. The only number that handles earnings corrections is 1-800-77-21213. The only form is SSA 7008. Both are free. Report any fee-based offers to the SSA fraud hotline at 1-800-269-0271. If you are paying out of pocket for Medicare costs you assumed were fixed and permanent, or your Social Security check has never been verified against the earnings record that built it, those are two of 7 rules quietly reducing senior income right now in 2026. The Senior Money Defense Playbook covers all 7 in one place, including the bank account rules, the provisional income formula that determines whether your Social Security is even legally taxable, and the IRMA appeal coming up in Call 3 with the exact forms and phone numbers for each one. The link is in the description below. The Medicare Savings Program, the $7.5 million gap, Call 2 does not go to Social Security. It goes to a completely separate agency that most seniors have never called. And the gap between those two agencies is exactly why an estimated 7.5 million eligible seniors are not enrolled in this program right now and are paying a premium every month that the state was supposed to be paying on their behalf. Here is the background that explains why this gap exists. The Medicare Savings Program was created by Congress in 1988. It was specifically designed to help low-income seniors cover their Medicare costs. In the nearly 4 decades since it was created, enrollment outreach was never funded at the federal level. The assumption was that state Medicaid offices would find their own eligible applicants. Most states have never had the staffing or the budget to do that systematically. So the program sits there, $2,500 to $6,000 a year per qualifying senior, and the people it was designed to help pay their premiums every month without knowing they could apply. Medicare is run by the Centers for Medicare and Medicaid Services. The Medicare Savings Program is administered by your state Medicaid office. Those are 2 separate agencies operating separate databases. Medicare does not flag your account and alert your state office that you might qualify. Your bank profits when you keep money in an account. Your Medicare plan profits when you pay your premium. Neither has a financial incentive to tell you about a program that eliminates what they collect from you. So the conversation never starts. Here is how to start it yourself. Call 1-800-633-4227. That is 1-800-MEDICARE. Ask them to connect you with your state's Medicare Savings Program office. When someone answers, say exactly this: I want to apply for the Medicare Savings Program and find out which tier I qualify for. The Medicare Savings Program has 3 tiers. Each one covers a different portion of your Medicare costs, and each one has a different income threshold. The income limits in 2026 are higher than most people expect, which is why so many seniors disqualify themselves before they ever make the call. Tier 1 is the QMB program, Qualified Medicare Beneficiary. The 2026 income limit is $1,350 per month for a single person and $1,824 per month for a married couple. QMB is the most valuable of the 3 by a significant margin. It covers your Part B premium completely. It covers your Part A premium. If you pay one, it covers your annual deductible. It covers every copay and every coinsurance charge on every Medicare-covered service you receive. Nothing out of pocket. The state pays it directly to Medicare on your behalf every month. Annual savings range from $2,500 to $6,000 depending on how much Medicare-covered care you use in a year. Tier 2 is SLMB, the Specified Low-Income Medicare Beneficiary Program. The 2026 income limit is $1,616 per month for a single person and $2,184 for a married couple. SLMB covers your Part B premium only. That is $202.90 every month eliminated. $2,434.80 returned to your income every single year. Tier 3 is QI, the Qualifying Individual Program. The 2026 income limit is $1,816 per month for a single person and $2,455 for a married couple. Q. I also covers your Part B premium completely, the same $2,434.80 per year. The income threshold is slightly higher than SLMB. which means it reaches seniors who earn a bit too much for SLMB but still need assistance. One critical detail about QI that most people never hear: QI is funded on a first come, first served basis each calendar year. When the annual funding runs out, new applications are waitlisted. If your income puts you in the QI range, apply as early in the calendar year as possible. Waiting until fall to apply for a benefit that runs out of funding in summer is a mistake that costs a full year of premium savings. The QMB billing protection most seniors never use. Here is the protection that comes with QMB enrollment that most seniors who qualify for it have never once used, even though federal law entitles them to it. Under federal law, any Medicare provider who bills a QMB recipient directly for a Medicare-covered service is violating the law, not a gray area, a documented federal violation. If a doctor's office, a hospital, a lab, or any Medicare provider sends you a bill for a copay, a deductible, or any cost-sharing amount after you are enrolled in QMB, you are not legally required to pay it. What you do instead is tell the provider you are enrolled in QMB and ask them to check your coverage status in the Medicare system. If they persist in billing, you report the billing to Medicare at 1-800-633-4227 and to your state Medicaid office. Providers who knowingly bill QMB recipients for Medicare cost sharing can face federal penalties. Margaret had been paying approximately $150 in copays per month on average before she enrolled. After QMB enrollment, those bills stopped. Combined with the eliminated Part B premium, her total monthly savings from Call 2 alone was $352.90 every month, permanently. The extra help, bonus nobody mentions. Here is something that almost no coverage of the Medicare Savings Program explains clearly, and it is one of the most valuable parts of enrollment. When you enroll in any tier of the Medicare Savings Program, you are automatically enrolled in Extra Help, which is the federal program that reduces your Medicare Part D prescription drug costs. You do not need to file a separate application. The enrollment happens automatically as part of your MSP status. With Extra Help active in 2026, your maximum copay is $5.10 for generic medications and $12.65 for brand name drugs. There is no Part D premium and no annual deductible. For seniors managing multiple medications, the annual savings from Extra Help alone can reach several $1,000s on top of the premium savings from MSP enrollment itself. The asset question that stops most seniors before they call. The most common reason seniors give for not applying for the Medicare Savings Program is an assumption that their savings or assets disqualify them without ever checking the actual numbers. The 2026 asset limits are $9,950 for a single person and $14,910 for a married couple. Your primary home is not counted. One vehicle is not counted. Only liquid assets count, meaning bank accounts, stocks, and bonds. 12 states have eliminated the asset test entirely for this program. Those states are Connecticut, Delaware, Louisiana, Maine, Mississippi, and several others. If you live in one of those states, only income is considered. Additionally, starting the 1st of April 2026, dependent relatives you financially support count toward your household size when calculating eligibility. This raises your income threshold, making it easier to qualify if you support an adult child, a grandchild, or another dependent living with you. The rule that applies to this program is simple. Do not assume you do not qualify. The application takes approximately 15 minutes to complete. The state determines eligibility. The only cost of applying and being told you do not qualify is 15 minutes. The cost of not applying when you do qualify is potentially thousands of dollars every year for the rest of your retirement. The IRMA appeal, the Call SSA, will never suggest Call 3 is back to Social Security, same number, and this is the one the SSA has the least financial incentive to ever bring up first. Because every month you do not make this call is another month the surcharge keeps running and another month the premium keeps collecting on income you may no longer earn. Let me explain what IRMA is and then show you exactly who it is hitting right now in 2026 who should not be paying it at all. IRMA stands for Income Related Monthly Adjustment Amount. It is a surcharge added to your Medicare Part B premium when your income from 2 years ago exceeded certain thresholds. The key phrase is 2 years ago. Your 2026 surcharge is based on your 2024 tax return. Medicare looks at that return, applies the calculation, and adds the surcharge to your monthly premium automatically. No letter explaining why. No suggestion that you might be able to appeal it. The number simply appears on your statement, and the premium is deducted from your Social Security check every month. If something changed between 2024 and today, the surcharge has not changed with it. It is still running on the old number. And for a specific group of seniors, that old number no longer reflects reality in any meaningful way. Who the surcharge is still hitting in 2026. Here are the situations that catch seniors without warning and that qualify for an immediate appeal. You retired at the end of 2023 or during 2024. Your final working year included a full salary or a partial year of higher income than your retirement income will ever show again. Medicare looked at that return and set your 2026 surcharge based on a salary you no longer receive. You are now living on Social Security and savings and still paying a surcharge calculated as if you are working full time. A spouse passed away in 2023 or 2024. Your filing status changed from married to single. Your household income dropped significantly because you lost a second source of income or a pension that ended at your spouse's death. The surcharge calculation did not adjust. It kept running based on the joint income from a return that no longer represents your household. You sold a property or business in 2023 or 2024. One transaction, not recurring. The sale pushed your tax return into a significantly higher bracket for that single year. Medicare picked up that number and has been charging you for it every month since, as though the sale is happening again and again every year. Your pension was reduced or eliminated. You reduced your work hours significantly. Any of these situations changed your income meaningfully, since the tax return Medicare is currently using, and the surcharge has not reflected that change. The surcharge tiers and what they are costing you. Let me give you the specific IRMAA surcharge amounts for 2026 so you know exactly what this call is worth. For a single filer, income above $106,000 adds $81.10 per month to your Part B premium. That is $973.20 per year on top of the standard $202.90 monthly premium. Income above $133,000 adds $204.40 per month for $2,452.80 per year. Income above $167,000 adds $324.70 per month. Income above $200,000 adds $445 per month. And the highest tier, income above $500,000 adds $576.90 per month. These amounts are added on top of the standard $202.90 Part B premium. A senior at the second IRMAA tier is paying $407.30 per month for Part B alone over a 1-2 month period. That is $4,887.60. If their income has dropped since the 2024 return, Medicare is using the difference between what they are paying and what they should be paying is being collected every month with no automatic correction mechanism in place. Here is the context that makes this particularly sharp in 2026. The Part B premium increased from $185.00 in 2025 to $202.90 this year. That is a 9.6% increase in a single year. Social Security's COLA for 2026 was 2.8% before a single retiree spent anything on groceries, utilities, or medication. Nearly a third of their entire cost of living raise was already taken by the Medicare premium increase. Seniors paying an IRMAA surcharge on top of that absorbed the hit twice, once from the premium increase and once from a surcharge tied to income that may not exist anymore. The 5 qualifying events that allow the appeal. The SSA 444 exists specifically to correct this situation. It is called the Medicare Income Related Monthly Adjustment Amount Life Changing Event Form, and it allows you to document your current income and request that your surcharge be recalculated based on what you earn now rather than what appeared on your 2024 return. Here is how to request it. Call 1-800-77-21213. When an agent answers, say exactly this: I want to request the SSA 444 form to appeal my IRMA surcharge based on a qualifying change in my income. That language opens the correct process immediately. The 5 qualifying events recognized on the SSA 444 are retirement or work stoppage, death of a spouse, divorce, reduction in work hours, and loss of pension income or loss of income producing property. A one-time property or business sale that inflated your 2024 return qualifies under loss of income producing property because the income is not recurring. For retirement, the documentation you need is your final pay stub from your last employer or a letter from your former employer confirming your separation date and final salary. For death of a spouse, bring a copy of the death certificate and documentation of the change in your household income. For a property sale, bring documentation showing the sale was a one-time event and your current ongoing income. Once you submit the SSA 444 with supporting documentation, your surcharge is recalculated based on your current income. If your current income falls below the first IRMAA threshold, the surcharge is eliminated entirely. The recalculation typically takes effect within 60 to 90 days of submission. Every month you delay is a month of that surcharge you cannot recover retroactively. Margaret had been paying a $298 monthly IRMA surcharge in 2026 based on income from a property her late husband had sold 2 years before he passed. That one-time sale had inflated their final joint tax return. Her current income bore no resemblance to what Medicare was using to set her premium. She filed the SSA 444 with a copy of the death certificate and documentation of her current income. The surcharge was eliminated entirely. $3,576 per year returned to her account every year going forward. A 6 to 7-year-old retired teacher in Phoenix named Helen had sold an investment property in 2022 for a significant gain. Her 2022 return reflected income far above what she earned from teaching or would ever earn in retirement. Her 2024 Medicare premium carried a $487 monthly surcharge. She filed the SSA 444 with documentation of her current retirement income. The surcharge was eliminated. $5,844 per year returned. From one form filed through one call to one number she had to know to dial. The system that was never designed to help you find this. Let me bring everything together with the one idea that runs through all 3 calls. 3 separate government systems: Medicare, your state Medicaid office, and the Social Security Administration. None of them cross-reference automatically against the others. None of them have a built-in step that flags when the number affecting your payment is wrong and suggests you call to fix it. Because fixing it costs the system money. The system was not designed to cost itself money on your behalf. The Part B premium went from $185 in 2025 to $202.90 in 2026, a 9.6% increase in 1 year. Social Security's COLA was 2.8%. Before a single retiree spent $1 on groceries or medication, nearly a third of their entire annual raise was already taken. The 7.5 million seniors who qualify for the Medicare Savings Program paid that full increase on a bill the state was supposed to be paying. The seniors paying an IRMAA surcharge on income they no longer earn paid it twice. The seniors with errors in their earnings, records collected their reduced benefit for another year because nobody checked the record on their behalf. 3 phone calls changes all 3 of those outcomes. None of them require a lawyer. None of them require paperwork beyond what most seniors already have at home. All of them are free. Your complete action list. Call 1 to Social Security at 1-800-77-21213. Before you call, log into ssa.gov and open your earnings history. Go through it year by year. Any year showing zero or significantly lower than what you actually earned is your starting point. When you call, say, I want to request my complete earnings history and verify my record for any discrepancies year by year. The correction form is SSA 7008 free at ssa.gov, mailed to your local SSA office, signed in ink. If anyone offers to handle this for a fee, that is the scam. The process is entirely free. Call 218-00633-4227, which is 1-800-Medicare. Ask to be connected with your state's Medicare Savings Program office. Say, I want to apply for the Medicare Savings Program and find out which tier I qualify for. Do not disqualify yourself before you call. Your home is not counted. Your car is not counted. 12 states have no asset test at all. The 2026 income limits are $1,350 single for QMB, $1,616 single for SLMB, and $1,816 single for QI. If you are near the QI income threshold, apply early in the year. QI funding is first come, first served, and runs out. Call 3 back to Social Security at 1-800-772-1213. If your income drops since 2024 due to retirement, death of a spouse, divorce, reduced work hours, or loss of pension income, say, I want to request the SSA 44 form to appeal my IRMA surcharge based on a qualifying change in my income. Bring documentation of your qualifying event. Every month you delay is a month of that surcharge you cannot recover. Now, I want to speak directly to the seniors watching this who recognize their own situation somewhere in these 3 calls. A Medicare premium you have been paying for years without questioning whether it was actually yours to pay. An earnings record you have never once looked at. A surcharge running on income from a tax return that no longer reflects your life. If that describes you, the next step is not another video. The next step is acting on what you now know before another month passes and another payment goes out that did not need to. But these 3 calls are not the complete.